Afternoon and welcome to Value Line's webinar series. Today you are attending the Uncovering Profitable Opportunities in Our Model Portfolios webinar. My name is Jason Weisberg. I am the Executive Vice President of Sales here at Value Line, and I'll be taking a few moments today to speak about our model portfolios that we offer our institutional subscribers. A few housekeeping items to begin. We are going to go through the presentation, probably no more than 20 to 25 minutes. Last 5 minutes we're going to reserve for some questions. You can submit your questions in either the chat feature or the Q&A feature on the WebEx platform. If we do not get to your question today, we will get back to you via email with a response on anything you might want to know. Other housekeeping items on your screen now, you'll see looking at the ValueLinePro.com website on the top right-hand corner where you see my mouse right now. It says Contact Us. You click there. You could also submit questions or any interest in anything later on. So if you don't have a question at this particular time, but you do think of one later on after the webinar, please feel free to contact us using this form here. So simply just fill in your name and information up here, click on Submit below, and we will get back to you as quickly as possible with an answer for you. With that said, one final note, you could also reach us anytime right here during normal business hours. Our institutional hotline number is 1-800-531-1425. That will put you in direct contact with an institutional specialist who could help answer any questions you might have about any of our products, including today's webinar topic, the model portfolios. So, with that behind us, let's get into the presentation. What we're going to talk about today is, again, Value Line's model portfolios. Basically, that's going to break it down into 7 different models that we're going to cover in today's session. 4 of those models is I like to refer to as the core 4 that come with subscription that any subscriber would sign up for, whether that's the Pro Basic, the Pro Elite, or the Pro Premium. The core 4 model portfolios come included in that. Additionally, we offer 3 more portfolios, and if you look on your screen here, I'm going to jump into our model portfolio part on the website. The other 3 is the Value Line Select, the Value Line Dividend Income and Growth, and the Value Line Special Situations Service. 4 that come with all of our subscriptions, as well as these 3 additional ones for purchase: the Select, the Dividend Income and Growth, and the Special Situations. Those are the 7 that we're going to cover in today's webinar. You can find some brief information by going to ValueLinePro.com. Come under here, Professional Services, and once you're under Professional Services, you'll see the section here, Value Line Model Portfolio Newsletters, and that'll give you a brief overview of what 3 newsletters have, as well as the core 4, which we're going to talk about right now. Let's jump in first to the core 4 models. If you look on your screen, I'm going to switch tabs. I'm already logged in to the description. I'm utilizing the Pro Elite, and this will give me access to the core 4. If it says welcome here, Jason Weisberg tells me that I'm logged into the service. What I'm going to do then is, after I'm logged in, you want to come to the Find Idea section, and then finally Model Portfolio with the core 4. Under the screen, you will also see here is additional 3 portfolios for purchase outside the standard subscription. Again, the Special Situations, the Select, and the Dividend Income and Growth. So if I click on Model Portfolio, they're going to load up the core 4, Portfolio 1, Portfolio 2, Portfolio 3, and Portfolio 4. Let's take a moment to quickly just cover each of these 4 portfolios. Now, before I go any further, let me give you a little bit of background about all the models. The model portfolios here at Value Line are all maintained by our analysts here, senior analysts with Value Line, and they are exactly what they say. They are models. We do not hold any actual positions in these but these are model portfolios that we do recommend for subscribers if they want to take a somewhat passive approach in some of their investments for their customers or clients. These are some models that you could use to meet certain criteria. Each portfolio is designed to meet a different objective. The portfolio either updated weekly or monthly, and I will tell you the differences as we go through each portfolio. They each have a specific target need, so they're designed with a specific type of investor in mind, and again, you're going to choose the portfolio that best fits your client's needs. Now, my experience here, I've been with the company now 9 years. I've spoke to thousands of advisors and portfolio managers over that time. They tend to either do one of two things. Or our subscribers will either take the models and they will use them by position exactly as stated, or they will take a somewhat a hybrid approach and use our models to pull out 3, 4, 5 ideas and then put that together with ideas of their own and create a hybrid portfolio utilizing these models as, say, the base or the underlying foundation of what they're trying to achieve. So with that said, let's talk about Portfolio 1. And if you look at the screen here, it tells you when you go to this section here that I clicked on, it'll give you a little overview of each portfolio. Portfolio 1 is modeled for the more aggressive investor. Each of these portfolios, all 4 of them, will hold 20 stocks always at a time. No more, no less. The key is to have 20 positions in each one of these. These 4 portfolios are also updated every week, not only here on the screen I'm going to show you, but also in the selection and opinion report, which you see I'm highlighting here, and I'll show you how to access it once we go through it. But looking at the screen here again, Portfolio 1 is modeled for the more aggressive investor. We tell you that we're wanting to emphasize year-ahead price performance. The stock must have a timeliness rank of 1, a financial strength rating of at least a B+ at the time of purchase. And although the analyst manager portfolio can sell or hold at any time, either to buy a stock that seems a greater potential to realign the portfolio, any stock whose timeliness rank falls to a 3 or lower is automatically dropped. And those are important things to know about the portfolio. Some characteristics of Portfolio 1, the companies generally have above average records for earnings growth. Few of these stocks pay a dividend, most pay no dividends at all though, and stocks in the portfolio can have betas considerably higher than 1, which indicates they will likely increase the risk-reward profile of the portfolio. If I click on the link to Portfolio 1, let's take a look here on the screen, and this shows you what's going on in the portfolio. Here's the 20 names that represent Portfolio 1. Some of these are well-known names, such as Honeywell. Right here, you have Lowe's companies, McDonald's, some others maybe not so well known, Ultra Salon, Watso Inc. But at the bottom of the portfolio holdings, if you look at the yellow arrow I'm just pointing to, will always remind you what you need to do for qualify for purchase in each portfolio by looking underneath the holdings box. And again, we'll give you the background and actually the name of the research person who monitors the portfolio. Up here, you'll notice above the portfolio holdings is latest commentary that was published this week. It says published July 15th because in the publishing world here, everything is dated to Friday of the week. So each week, we're going to update you on what's going on with each one of the core 4 portfolios, what's been bought, what's been sold, what we think about, anything that might affect it. And if you notice here, for example, it states, right here, we are making no changes to Portfolio 1 this week. So we'll tell you everything that's going on. Know what to do, what the changes are. We also do keep performance on all of these portfolios that we're going to speak about today, and you can obtain those performance numbers by simply contacting us, and a specialist will email you those performances, as requested. So again, Portfolio 1. If we go over to Portfolio 2, let's just look what's held in there. This is portfolio 2, okay? This is generally suited for more conservative investors, all right? And to qualify for purchase, if you look at the bottom of your screen here, it'll tell you a stock must have a yield that is in the top half of the value line universe, a timeless rank of at least a 3, safety rank of a 3 or better. And it goes on to state if a timeless rank falls below a 3, that stock will automatically be removed. Again, some household names you might recognize, such as Whirlpool, PepsiCo, Clorox, and if you look up top, here is the latest comment on the portfolio, again published for this week. So portfolio 2, and we'll also tell you before the positions are listed, who this primarily is suitable for. In this case, portfolio suited for the more conservative investor. It's going to give you some income with some potential price appreciation. To look at portfolio 3, portfolio 3 is suitable for investors with a 3 to 5 year horizon. So this is really based on our 3 to 5 year appreciation potential model. Some of these names you may recognize, others you may not. This will be very good for those, obviously, who have a long-term horizon. 5 years these days is an eternity. So it gives you some information on that, just like every other one. Up top here is the comment from the analyst for the week. That here is what you need to do to qualify for purchase. And again, there really focuses on the 3 to 5 year appreciation potential for this portfolio. So this portfolio, again, designed for that long-term investor. And then finally, income related, right? Portfolio 4, you always need a dividend-paying portfolio. Portfolio 4 really focuses on those investors interested in current income. So the focus on this is the stocks have to have a 1% above the median for the value line universe of a yield. If you look below this right here, again, it tells us what these companies need to do to be considered for this portfolio. Stock must have a yield that's at least 1% above the median for the value line universe, a timeless rank of at least a 3, and a strength rating of at least a B+. So those are the companies that would qualify to fit in this. And here you see, a lot of household names. You have your AT&T, your Caterpillar, your Coca-Cola. So these are some well-known names that we have here into the portfolio. Over on the portfolios is fairly low. We look to maintain a stable portfolio over the course of a year, so there's not a huge amount of turnover that's experienced by the analysts. So again, whether you subscribe to the Pro Basic, the Pro Premium, or the Pro Elite, these 4 portfolios will come with your subscription. You'll have these 4 portfolios with any of the online subscriptions that we sell to our subscribers. And you want to come under the model portfolio section under Find Ideas to see this. But as I mentioned, let's jump into the dashboard for a moment. Because the dashboard, I also want to remind you, as I made a note earlier, that the 4 portfolios are also updated every week in the Snow report, which is here, the selection and opinion. And by clicking on the selection and opinion, Monday, this gets released approximately 8 a.m. Eastern Time. If I scroll, the first page obviously is our opinion, the economic and stock market commentary. But starting on page 2, but in this case, we're into the quarterly report here. So here we go, page 3. Here's your model portfolio updates. Now, these are the same comments as you saw on the screen before. They're just in a more you can page through kind of format. But you'll see they talk about the 4 portfolios, and if I scroll down, they'll show you the same position holdings in the same tables as we looked at on the other page. And as I slowly scroll, you'll see portfolio 2, port 3, and portfolio 4. Some of our subscribers are used to doing is every Monday morning they'll come in, and if I quickly scroll back to the top, they'll come to the dashboard, they'll come to the section and opinion right here, they'll click on it, they'll open it up, and they'll give a read of that, and they can quickly then see what not only is what our economic and stock market commentary is, but then dive. Hey, we had a little bit of an audio problem there. Beck sometimes likes to cut out in the middle of our presentation, so my apologies. So let's wrap up on those core four and move on to the other three portfolios that we have going on. And again, that was the dividend income and growth, the Value Line Select, and the Value Line Special Situations. So again, all of those other portfolios can also be found by going to Find Ideas. So if I click on Find Ideas, the three other portfolios we're going to quickly go over here. Okay, first let's stay on the subject of dividends and go into the dividend income and growth. This is probably one of our most popular models outside of the core four that come in. So the three portfolios we're going to go over now, these are all monthly portfolios. You know, I mentioned before that portfolios 1, 2, 3, and 4 are updated on a weekly basis. These are monthly updated portfolios. So every month, Value Line's research department is going to review all the dividend-paying stocks in our database. We have approximately 1,700 companies that they're looking at, but only one of those companies a month will qualify to be featured in the dividend income and growth portfolio. And what happens is each month we highlight that specific company. In this case, it's WPP PLC for July. And while hopefully most of you are familiar with our one-page reports, in these reports we take a really deep dive, and there are multiple pages about the company. And we talk about the specific company that we're recommending for the month, and then we also go into the portfolio itself. And on your screen right now, you're looking at the actual Value Line dividend income and growth portfolio. Names, you know, are well known. Others maybe not as well known. But once a month, these stocks get picked. So our researcher, you know, our top research guys, they go out, they screen for stocks with strong dividend yields, with a preference for those that have consistently raised their dividends and have the financial strength to continue raising them of the rate of inflation. Stocks to qualify must also have a high safety rank, so some strong cash flow. Then the portfolio is going to go in and going to recommend the single most attractive stock for increasing the income and financial well-being of the portfolio. Also going to identify two other strong dividend-paying stocks that we're going to give you a chance to review. And again, as you're looking on the screen, you'll see this is a really deep dive into this WPP. It's just a little different than standard. Now, while I have that, I will mention one other part of the webinar at the very end. We are going to talk about a recommendation each month for our webinars. We also have a single recommendation that we'd like to make. Not so much that portfolios, but it'll be a separate one, so just stay tuned for the end of the webinar, which it looks like we're about 10 minutes away from that recommendation coming. So the dividend income and growth portfolio, again, not included with a standard subscription, but available for a separate purchase. We keep performance numbers on this as well, and as you notice on your screen, we take a deep dive into the company. And if I go back up, just real quickly, just to give you another quick shot, here is the dividend income and growth alternative stocks. So there's two portfolios. There's the growth featured stocks, and then the alternative stocks. In the dividend income and growth portfolio, there's actually two portfolios within the master. So we're going to give you really a double for your money with these model portfolios. If we out of this one, let me just close down some of these windows and get back to here. Let's go back now and take a look at the Value Line Select. The Value Line Select portfolio is similar to the dividend income and growth in the sense that it is also a monthly portfolio. Okay. Now, this is the Value Line Select looks at our universe 1,700 companies. Only one stock, again, just like the dividend income will qualify for the Value Line Select portfolio. Now, obviously, it's a different set of criteria that our analysts are looking at. For this portfolio, we're going to screen all of the 1,700 stocks in our universe. They're going to evaluate more of the operations and financial health of a company, look at some of their competitive prospects, the competition, future financial results that we're going to use to derive some target prices. Then our analysts are going to select one company each month that's going to have the best risk-reward ratio. Now, each of these picks reflects current market conditions. Takes into consideration the risks of purchasing the stock at that time. That's important to remember. Again, a monthly pick, very well vetted. Out of the whole universe of 1,700 companies, you're going to have one pick. And if I look at this month's pick, Aeropex and Chemical Inc., and click on Download Report, so exactly the same format as the dividend income and growth. We're going to take a real deep dive into the specific company, look through the report. You'll see a whole bunch of information on it. And keep scrolling down, you'll see a lot of good, helpful information. If I go back, you'll see in front of you, this is pretty much the current makeup of the portfolio right here, these companies that are listed. And we'll give you an archive where you can look at previous recommendations. But these are really some of the top companies that analysts are looking at, and they rigorously screen these out to come up with the one that best fits at for the month. That was the second, and let's take a look at the last portfolio we're going to talk about, and that's the Special Situations portfolio. Again, finding it under Find Ideas, and then you go to Special Situations. The Special Situations portfolio has been around for a while now. Again, we have performance numbers on it. This is also a monthly portfolio. If you take a look at it, it's actually a report as well as a portfolio on it. So we talk about the economic view in the report. As I scroll down, we're going to talk about some specific companies. Then we're going to dive into two portfolios, an aggressive and a conservative. Now, the Special Situations model is really good for finding small and mid-cap equities that have a big upside potential. They're really the driving force behind this. You're going to get, as I mentioned, there's an aggressive portfolio and a conservative portfolio that's more income-oriented than the aggressive one. The research team is going to go through a whole stream of annual and interim reports, prospectuses, SEC filings, a whole bunch of different ways to look at these smaller companies and really come up with those that we feel would fit into a portfolio. So if you're an aggressive investor, you're going to use the Special Situations to find companies with the potential to reward